and our starting cash was $6,529.65, and that gave us a total for the week How's it going? It's Rocky. Welcome. Every Friday, I release content on my experience trading the micro E-mini and the E-mini futures. But lately, I've been focusing on the micro E-mini because I screwed up a few weeks ago. And if you are curious about that, feel free to check out my playlist on what I formerly called the $2,000 weekly challenge, where I tried to earn at least $2,000 for daily income trading both the micro but mostly the E-mini futures. However, lately, because of that screw up, I no longer have the cash balance to trade the E-mini, but that's okay. I'm now calling it the Don't Lose Money Challenge, where I'm essentially trading the micro E-mini futures. And it's a different strategy because I'm now trading mostly during the Globex session. And that's probably why, if you've been checking at night, I've been doing some random live streams of me trading in the evening, which I am calling the Globex chill session here. But mostly, for this week, it is week number 33 for the year 2021. And this content will be in this playlist here, which we call the Don't Lose Money Challenge, where my focus is a little bit different because I am busy doing something else during the day. I am trading way less, and I'm actually looking at the hourly charts more as opposed to the 5-minute charts. I'm still looking at the 5-minute charts for the entry, but since I am able to handle the swings for a micro, I am depending more on the 1-hour chart. And before I get started on how we did this week, I just want to say thank you for those that has been following my content. We are now up to 331 subscribers. And I do have a lofty goal of hopefully reaching at least 1,000 subscribers by the end of 2021. I'm currently recording this Friday, August 20th. It's 9:44 in the morning in the Pacific Coast. I decided not to trade anymore because it's been a mentally taxing week for me for trading. And I'm going to go through exactly why that is. So here I have a 1-hour chart, which is what you're seeing here. So you can see for the week, I actually just did 2 trades only. And if you're new to my content, what I like to do is I draw a vertical line when I enter a trade or open a contract, and I denote that by a blue line. And if I'm short and I close a contract, I denote that by a purple line. And if I am long and I close a contract, I denote that by an orange line. So as you can see here, for the entire week, I just did 2 trades itself. For this first trade, it was a short, and we did gain $113.96. And of course, the big what if on this trade is if I held on much longer, I could have made a lot of money. But those type of thinking is dangerous. I don't think like that anymore. You should only think about when you enter and when you exit. Anything that happens after that, the what ifs, that could be quite dangerous. And our second trade here, it was a bullish long position, and we made $406.96 on this trade. So for the week, we had a very rough, if you look at this statement here, it's kind of rough because, started the week red, and then we're back to green at $113.96 on Tuesday, down again on Wednesday, and down even much more on Thursday. But luckily, it really feels like quite a roller coaster here. We ended the week at $520.92. Now here is my account statement, and I show this for transparency and also as a diary for myself. And I measure my success really based on my cash balance. So it's realized profits that I do have, not unrealized, but realized profits and losses. If we look at the description here, you can see I did not deposit or withdraw anything for the week. And if we look at the trade history here, you can see what I mentioned, that I only did basically 2 trades for the week, as I showed on the 1 hour charts. I did a maximum of 6 contracts for the week because that is all I can afford with the cash balance that I do have. So for the week, we ended at $7,050.57, and our starting cash was $6,529.65, and that gave us a total for the week at $520.92. So I'm quite happy that we have 3 green weeks in a row. It's been fairly good trading, and I'm hoping to move on that momentum and be able to scale up a bit more responsibly this time around. And what I always do, just to put it into perspective, compared to a 40-hour 9 to 5 in the US, that would give me an hourly rate of $13.02, which is not bad, pretty close to minimum wage. But what I'm hoping for again is, scale this up and make a much more decent money towards the end of the year. And something different, that a little statistic I want to be able to show you here, is we made $520.92 for this week. And basically, if you divide that from what we started with for the week, which was $6,529.65, that is a gain of 7.9%. Let me just multiply that by 100 so you can see that a lot nicer. So our gain for the week is 7.97%, and that is realized profit. And I think that's a pretty solid gain that I am happy with. It's more or less historically what the S&P 500 or most of the indexes would have, average 7% return every year. So first, I'm going to analyze this first trade that we did on Monday, which I am going to refer to as a lucky trade of the week. This is the trade that we made $113.96, and we opened 4 contracts here at around 9:35 in the morning. And the reason I shorted when I did this was because the stochastic RSI was on the oversold side, and the MACD had crossed over. And the dangerous part about following a crossover when it's above the 0 line, the probability isn't really there to help you out. So it was a bit of an aggressive entry on my part. So yes, when I did enter, this was a red candle, but that reversed rather quickly. And if you look on the right on the tick-based chart, again, the stochastic RSI was on the oversold side, and it also had crossed over at that time when looking at the MACD. So that's the bit of a dangerous part with looking at these indicators sometimes, because they are lagging. So sometimes you need to give it a bit more time to confirm the move that you're actually looking for. But for this one, 4 contracts, we entered at 34,365, and later on we shorted another 2 to average up at 34,395. So it actually gave us a average of 34,375. So I'm drawing this horizontal line on the time-based chart, and I'll also do that on the tick-based chart. So visually you can see why I'm referring to this as a lucky trade, or a stupid trade really. But anyway, I'm going to call it a lucky trade. So with this trade, if we look at the tick base, since you can see this a lot more clearer, you can see that it went all the way up to 35,548, which is the high for the year or overall for the Dow Jones Industrial Average. And basically that's the reason why I held on to it, because I didn't want to take the loss. And when I was looking at the 1 hour charts, which I'm going to bring up right now, when I was looking at the 1 hour charts, I was seeing a bit of a dip on there that was heading back down. And also with the Fed talk and all of that, there's a lot of other variables that I was depending on, which is dangerous. And that's why I call this the stupid trade, because when you're day trading, you're supposed to just look at a sliver amount of time and try not to focus on other externals like the news or hopeful that this will happen because of this, that, and whatnot. But anyway, thankfully for this trade, let's go back to the 5-minute charts here. Thankfully for this trade, it did go back down, as you can see here, and it kept going down, and it was here that I finally decided at 5:33. I actually woke up early. I did have my OCO to protect me with a trailing stop, and I was able to exit and made $113.96. Of course, hindsight 2020, if you look at that, as you know, the market just kept going down and down, and I could have held on to it and made more money. But again, that's a dangerous thought, that something as a new trader you shouldn't be thinking of, because all that matters graphically for my trade is between this blue line and this purple line. Anything outside of that really doesn't matter, because it could go either way. So again, I refer to this as a lucky trade because we did hit this high here of 35,448, and it could have gotten a lot worse. Now on the second trade, it occurred on Wednesday. So after the Fed talks, I actually avoided trading on Wednesday because the report was going to come out at 11 a.m. Eastern time, but I waited until after that. So I was watching it during the power hour. And for this trade, I call it basically a gambling trade, which is again not ideal, but I want to show you my experience. Luckily with this one, we got out at $406.96. But for this trade, I did not rely on the indicators at all. I was actually just relying on the past experiences when the Fed reports comes out, where there's a lot of panic and the stock goes all the way down and it reverses back. So again, this is a dangerous notion, and that's why I say I refer to this as more of a gambling trade. If we look at the 1 hour chart here, you can see on this big one candle during power hour, it was quite a big dip that occurred, and it was already the second red day of the week, and that is why I was banking on a reversal. So for this one, we did 6 contracts, and I'm just going to draw the horizontal line, or where our average was. This trade, our average was 34,925, which I'm showing here with the horizontal white line. And then as you can see on this hourly chart, and this is why I said it was a mentally taxing week, it was actually, most of the time we were underwater on this trade, and it kept reaching my average. I hit it twice on Thursday, but it became more of a ceiling there. So I kept holding on to it, and finally today I was able to exit at 35,069, which gave us a gain of $406.96. So I'm going to talk more about this hourly chart, because if you look back on the 5-minute chart, there was really no reason to go long on this trade, because based on the strategy I'm using, stochastic RSI was in the oversold or below the zero line and diverging here. And then if you look at the tick base, again, we were below the zero line, it was heading down, and there was no real reason to go long on it. And that is why I held it on from Wednesday through Friday. Lots of ups and downs, but I call this, again, the silly gambling trade, but gladly we were able to get out of it. So I guess for this week, my goal, this week is, again, to be transparent about my experience, but really showing you about 2 stupid trades that I did. But the only reason I survived was because I took care of my position. I knew my position size, I knew how big my account is, and I knew that I could weather any margin calls, if any. So I guess the lesson really for this week, be aware of your position size and where your cash balance is. Because if you're new to futures trading and previously you were trading equities, penny stocks, or couple dollars, less than $5 type stocks, you have this mentality that you always maximize the amount of cash you have, and if you screwed up, you can always hold on to the bag, and that's not a problem. But with futures, that's really a dangerous way of thinking, because you can't hold the bag overnight with futures, because there's a mark to market. Everything that's unrealized becomes realized at the end of the market day. And if that's one lesson that I could teach someone who's trading for the first time on futures, You need to think about those two mentalities and really separate them, because you can't hold a bag overnight with futures if you are maximizing the amount of contracts that you can afford based on the total cash balance that you have on your account. But anyway, hope you enjoyed a bit of the trades that I shared this week. If you like my content, please do like and subscribe. Again, I appreciate you for continuing to follow my journey. And hey, maybe I'll catch you in one of those random Globex chill session that I try to live stream after 6:30 p.m. Pacific time. All right, have a good one and see you next time.